Welcome back to your online tutor, the one place where we turn questions into answers. Today we're touching on our accounting paper 2 November 2023 past paper, and we're specifically looking at question 1's bank reconciliation questions. Okay, please follow along, jot down your questions in the comment section. Let's all discuss solutions together, find a way to help you understand this section better and just get you closer to those distinctions. Let's get into it. Okay, so let's start with question 1. Our scenarios on our left hand side, and our answer book is on our right hand side. Hope it's nice and clear to us all. See if we can make it bigger. Nope. There we go. Perfect. Okay, so question 1. Reconciliation. What is reconciliation? I think it's always very nice for us to do a very quick overview of what reconciliation is before we delve into reconciliation questions. Making sure we're all on the same page. So what is recon? What is bank recon specifically? This is basically ensuring that the cash books of the business, so us, we see ourselves as the owners of this business, so us agree to the bank statement. And we don't exactly have control over what the bank does, so we use a bank recon to make sure our books is correct. So what is the point of this whole process basically? So besides making sure that our bank account balance is correct, by adjusting everything that needs to be adjusted for from the bank statement to our books and from our books to the bank statement, what's another reason? It helps us to detect fraud. So sometimes we don't see fraud until we're like, but there's 3,000 Rand missing. Where did that go? So it helps us detect fraud. Missing transactions, something that happened in your bank, debit order, deposits that we don't know about, or it just could be a bank fee. And also errors, identify possible errors. Okay, so let's go into our question specifically. 1.1, bank recon. The information relates to Mango Traders, so we are Mango Traders. We put ourselves in the position of the company, so this is us. We are Mango Traders for June 2023. Months and dates are important. NB. So whenever you see dates, you highlight, you underline, you grab, you circle. Dates are very important. The business uses the official bank statement, which is received on the 26th of each month. This is important. Again, it talks to dates. Dates are important. What does this tell us? If the bank statement is received on the 26th of each month, it means from the 27th all the way to June does end on the 30th, yes? 30th of the month. These transactions will not appear. Transactions are not in your bank statement. So therefore, we need to add to bank recon. So remember what we said? We don't adjust our bank statements, but we adjust your bank recon, which serves as a bank statement. Okay, so not in bank statements, add to bank recon. Perfect. Okay, 1.1.1, calculate the following on June. So this is your current month. And this will be very important, and you'll see why I linked to current month, prior month, and so on. Again, dates are important. Whenever you see dates, you circle, you underline, you rule, whatever works for you. So we are calculating, we are showing plus, minus, subtract. We are showing a whole lot of calculations. The correct totals for the cash journals. Cash journals is CPJ or CRJ. use the table provided in the answer book. So the answer book is on your right-hand side. And here we see 81,000 as our opening balance and 80,620. These amounts over here. Perfect. Then we've got our second point, your bank account balance in your general ledger for the business. Okay, so let's go back. Whenever we see bank account balance, we know we need to take plus or minus your opening balance. So these are just notes you make to yourself. Yes, plus CRJ total minus CPJ total. And this is equal to your bank account balance, which is right over here. Okay. Then we've got 1.1.2, prepare the bank reconciliation statement. Okay, and whenever we talk of bank reconciliation statement, we know we are looking at our bank, we are correcting our bank statements. So bank statements corrections, if I can put it that way. And then we ask to explain 2 strategies of the business that can be used to address the problem of missing cash. So we receive cash from transactions, but money goes missing. This is very easy marks. I always say discussions is where we score marks. Marks in the bag. So you know you're guaranteed 4 marks already for this question. Let us move down. Information. The bank reconciliation statements, dates, on which date? Let's grab our highlighters. 31st of May 2023 showed the following. Okay, so this is so let's go back. We asked to complete the information for June. So June is our current month. June again here was our current month. So this is May, and May is our prior month. Dates are very important. So if you're shown your bank reconciliation statements, what does this mean? It means that these amounts in the table below were in either your CPJ or your CRJ in your prior month, okay, but not in your bank statement. So what we expect is to see these amounts in June's bank statement. So if we see in June, so if in June 2023 bank statement, we will be happy. Why? Because we are saying the amounts in your cash books, CPJ and CRJ, would then agree to the amounts in your bank statements. It would appear in both books. So that's what we want. Therefore, there will be no effect on your cash books and your bank statements because they appear in both. Okay. The first point in our table is favorable balance on the bank statements, which is 27,600. Are we still together? 27,600. And again, what does favorable mean? So, favorable from our bank statements perspective. Bank statements. We've got our debit as usual on this side and our credit on this side. Okay, our bank statements, our bank sees the consumers as creditors. When we put money in the bank, so consumers, put money in the bank owes us our money. So let me erase that. Sees us as creditors. Ooh, what is going on? So your bank statement sees us as creditors. Consumers are creditors. Consumers. So you put money in the bank owes you your money. So it's your money and not the bank's money. So the bank owes you your money. Let me just write that out there. Bank owes you your money. And just like any creditor statements would work, things would increase on the credit side and decrease on the debit side. So a favorable balance is where things are positive. So This favorable balance of 27,600 will appear on your credit side. 27,600. Because it is favorable, where it is positive. As opposed to here at the bottom, we've got a favorable balance on the bank account. How do we then show this? So this would be, going back to your T accounts, bank. Bank is an asset in our books. Debit, credit. Okay, so things will increase on the debit side like any asset and decrease on the credit side. So if it is favorable, it is where it is positive. Therefore, the favorable balance of 49,100 is your opening balance because it is from which month? Prior month. That's why the months are important. May. So it's your opening balance for June, June. Because it was your closing balance in May. So it's a positive, favorable, positive balance in June. Okay. Happiness. Let us continue. We've got our deposits over there. We've got 30,000, then a second deposit of 18,200. Outstanding EFTs over here. Of this amount. And then we've got EFTs again of 19,300. And then lastly, what we just spoke about, which is your favorable balance as your bank account at the end of the previous month, meaning it's your opening balance for the next month. So we can already put that amount in to save time. So let me make our screen smaller again so we can see both items. Grab our black pen. So we're saying the amount of 49,100 is our opening balance as per our bank account. Okay, so let's go put that in. Opening balance of 49,100. Opening balance. Okay, because you remember we said here, your bank account is equal to opening balance or closing balance of the previous month plus CRJ, which we don't have our totals yet, less CPJ. Let's read our additional information for note A. The cashier reported that the cash to be deposited on the 18th of May was stolen. Again, dates are important. 18th of May, but we're like, hold on. There was an 18th of May somewhere else. Let's color code our things. There was an 18th of May somewhere else. So here's 18 May. We're like, there was another 18 May there, yes? Was stolen. While she was on her way to the bank, this amount must be written off. So again, where was this amount? So this amount did not ever touch your bank statement because it was only in your journals. So in your journals, but not in your bank statement. So where was it? It was in deposits. Deposits equals receipts. It was in your CRJ. Therefore, what do we do to this amount? Because it was supposed to be written off, it didn't end up in our bank accounts because it was stolen. So it's money that's supposed to be deposited but didn't end up getting deposited. Therefore, how do we reverse or how do we decrease our CRJ? We decrease our receipts by increasing payments. Okay, because we can't have a negative receipt. So we just do the opposite, and the opposite of receipts is payments. So therefore, in your CPJ, you will show this amount of 30,000. So let's put that into our CPJ while we're at it, 30,000. So it's easier to do it as you go, so you don't forget anything. Okay, and here, part B, cash journal totals for the 30th of June 2023. Before receiving the bank statements, these amounts are already included in our answer book. So that's great. Okay, so these were our opening balance for our journals. There is no further information in part A for the other things. So we'll continue to the other parts and see if these amounts will appear. Okay. Part C, extract from our June bank statements. Again, dates are important. Is June your prior month or your current month? Current month. Okay. Remembering that your totals here are for which month? 30 June relates to which month? Current month. Perfect. Okay. So if it relates to your current month, we know that there can be adjustments for June in CPJ or CRJ because your totals include June's amounts. Okay, part C. So the first one is A Stationaries EFT 816 of 4,700. So let's go back and check. Do we see EFT 816 above? EFT 816. Oh, yes, we do. There we go. EFT 816. But we like this amount is different. So why is it different? Do we get any additional information? EFT 816 to ACE Stationaries. So there's color code things. EFT is correct on the bank statement. Let's go back. 7,400. It's correct on the bank statements. This over here where we are, part C, is the bank statement. So meaning your journal is incorrect. Okay, so you're not affecting, so you no adjustment. If it's correct on the bank statements, there is no adjustment to bank recon. So where do we adjust? We adjust journals. Okay, so what is the difference between the two amounts so we know which amount to adjust by? We've got 7,400. 7,400 less 4,700. And what does this give you? Let's put that into our calculators. This should give you 2,700, yes? Okay, but our starting point always is to ask ourselves, where was it previously included? This amount was previously included, EFT as a payment. So it would have been included where? In your CPJ. It was overstated in your CPJ by 2,700. Therefore, we decrease our payments by increasing our receipts. Okay, so we don't have a negative payment amount over here. No, never. So we'll increase our receipts by the same amount. Let's increase our receipts by 2,700. Are we still together? Let me just say it one more time. So this amount was incorrect on your bank statements, therefore no adjustment to bank recon. So where was it? It was correct on your bank statement. So where was it incorrect? It was incorrect on your journals, correcting your journals. So we don't decrease, we don't have a negative payment. Never, never, never. So we'll do the opposite, and the opposite is to then have a positive receipt, and that will cancel out the overstatements in your payments. Okay, so think about it. Negative 7,400, so 7,400 minus 2,000. So let me write it out so you see it. 7,400 minus, yes, 2,700 will get you a net balance of 4,700 as a payment. So by including your receipts to cancel out this overstatement, you end up coming to the correct payments amount. But because this amount was already there, we do not have to include it. We just reverse it, the amount that was incorrect in our receipts. Okay, let's move on to the next one. We've got Spark Wholesalers, EFT here. EFT 817 of 19,300. Let's go check above. Do we have anything that links to that? So Spark Wholesalers, EFT 817, same amount here. So let's grab our highlighters. EFT 817. EFT 817. Okay, and because it appeared as outstanding in your EFTs in your bank reconciliation statement, we expect it to appear in the next month in your bank statements. And because it appears, there is no effect on anything because it was previously, as we said, in your CPJ, yes, and not in your bank statements, and now it's finally in your bank statement. Therefore, the amounts in your CPJ agrees to amounts in your bank statement. This is the point of a bank recon. There is no further adjustments. BK Builders, EFT, this point over here, 792 of 6,200. Let's check above. So nothing relates to it above. Let's check out additional information. EFT 792 BK Builders was incorrectly recorded in your June CRJ. Okay, how is it incorrectly recorded? So they don't tell us anything about amount, so you can't assume the amount was incorrect. So amount is correct. How else was it incorrectly recorded? You told us it was recorded in your CRJ, but an EFT is a payment. And payments, EFT is a payment, yes. And payments are supposed to be in your CPJ and not your CRJ. So the first thing we need to do for this, number one, is to decrease your CRJ. And how do we decrease our CRJ? By increasing your CPJ, the opposite. Okay, so we've got an amount of 6,200. Let's take out that amount. 6,200. Okay, so that amount is now taken out of your CRJ and put into your CPJ. Happiness. And then we've got, it wasn't recorded, so it's in your bank statements, meaning it is not in your CPJ, so not in CPJ or CRJ. Possibly, depending on our additional information, as we can see over here. So meaning it was not recorded in your CPJ because it was recorded in your CRJ, so there's nothing in your CPJ. So now let's include it in your CPJ. Let's include the same amount of 6,200 in your CPJ. So plus 6,200. Perfect. So this is all we need to do for this part. Let's move on. Then we've got your deposits as at your 30th of May of 18,200. Let's go back up and see if it relates to anything above. There we go. The same amount over here. 30 May, 18,200. Deposit 30 May, 18,200. So it appears in recon, bank recon above, plus statement. Again, no effect. happiness. Let's move on to our next one. We've then got a cash deposit fee of 320. What happens to this amount? Do you have any additional information? Nothing about it. So because it was in your bank statement, there's no mention that was in your CPJ. Let us include it in your CPJ because a deposit fee, something you are paying for, payment. Or rather, let's say a deposit fee is an expense and therefore it is a payment. And payments are shown in your CPJ. So we've got a payment of 320. Okay, the next one, we've got a direct deposit for G Glen of 14,600. Let's check above. Did we have 14 or we're all out of all our transactions above? Okay. So we've got 14,600 direct deposit. Do we have anything at the bottom? Yes, we do. So here we have a direct deposit by G Glen for monthly rent. This relates to business income. Business income. So just be careful with, is it an expense? Is it an income? Direct deposits coming to us. So this is an income. An income goes to your receipts. You receive it. CRJ. Okay. So direct deposit of 14,600. Let's go ahead and include that in our CRJ. Perfect. Then let's move on to the next one. We've got VX Garage EFT 818 of this amount over here, 3,780. Do we have any additional information? We do. So let's highlight our keywords. We've got EFT 818 VX Garage, was for repairs. Repairs already talks about expenses. Expenses where we can already think payments. And because it's a payment, we think CPJ, cash payments journal, to the company vehicle. The owner neglected to submit the transaction record slip to the bookkeeper. Bookkeeper is our books. So this is CPJ's books. No entry was made in the books, so nothing has been recorded in your CPJ. It is in your bank, so there's no effect on your bank recon. We can just then adjust CPJ payment. Okay, so CPJ then goes up by how much? 3,780. 3,780. Then we've got our interest of 240. Interest income, because we see here, let's go back before we confuse ourselves. So I think let's make it very clear to ourselves. Bank statement. So bank statement, let's go back to our breakdown. We said bank statement sees us as creditors. So things increase on our credit side and decrease on our debit side. So if anything appears on your credit side, it is a positive. So interest, income. Things on this side is an income. Anything on this side is then an expense. So interest income of 240, they owe us 240 Rand for keeping money with them. 240 was not reflected in your CRJ as an income. So let's add 240 as an income. 240. So as we go, we add. So do not forget any amounts. Exam technique. And so we finish our question as well. The monthly transaction fees. So sorry about that. The next one over here. The transaction fees are 540. And then we've got additional information. The monthly transaction fees were duplicated on the bank statement. That is, and we see that also. 540, 540. So what do? We always need to break things up so we don't confuse ourselves. Point 1, we need to remove 540 from, we know debit is negative, so transaction fees, these are an expense. Okay, remove from bank statement. Okay, how do we remove from bank statements? We go to bank recon. Okay, so before we go to bank recon on our right hand side over here, bank reconciliation statement, let's start with our skeleton for it so we know we can maximize our marks. So we're going to say favorable or unfavorable balance as per bank. So these things never change. We can fill this in even before we get amounts. Bank statements. Then you've got outstanding deposits. Again, it will always be outstanding deposit and outstanding payments. So we don't know how many outstanding payments we'll have, so we'll leave those plots blank. We don't know how, if we have more than one outstanding deposit, or so we'll leave those plots blank. Then we'll go to our last one, which will always be the same. Balance as per bank accounts. And it always helps to put favorable and unfavorable, because then you know on your debit side or on your credit side where the amount goes. And as you do your bank statements, I think something I like to do is that we go back to this. So remember here we said bank statement, your credit side, things increase, so you go to your answer book and you put a little plus over there. Then you go bank statements, things decrease on your debit side, so you put a little minus there by your debit. Let's go back to our scenario. So we told that the monthly transaction fees was duplicated on the bank statement, yes? So we said the first thing we're going to do is remove the 450, this 450 that's not supposed to be there from your bank statement. Okay, so we want to write a nice description about it, because it's not an outstanding deposit and neither is it an outstanding EFT. It's not outstanding. It is an amount that happened already, so it's not outstanding. Okay, so we'll write a nice little short, very brief reason as to why we're removing this 450. So we could say incorrect amount, we could say correction of incorrect amounts. As long as it's short and brief and it makes sense, you will get your mark. Okay, so transaction fees again, let's go back. So let's go back to our thing. We know credit side, things increase, and debit side, things decrease. So an expense such as a transaction fee would have appeared on your debit side. So 540. Now we are trying to reverse this amount, so we'll put it on our credit side. So credit side will have an amount of 540. And if you need to do this for yourself as well, please do, so you do not miss out on your easy marks. Let's do part 2 to this. So first we remove it, then we say it was included in your bank statement. Yes, just twice, so we just removed one of them. And then we say, was it included in your CPJ or CRJ? No, so let's include it in your CPJ, because it is a fee, and a fee is an expense, therefore a payment, and payments are seen in your CPJ. Okay, so we've got 540, and let's include 540 in your CPJ. So 540. Perfect. So include in journals. So have we done everything? We did all of that: transaction fees, interest, direct deposits, happiness. Okay, let's move on to part D. Entries in the cash journals for June 2023 that do not agree with the June bank statement. So let's make sense of this. We are saying these amounts appeared in journals CPJ or CRJ, but not in statement. So now we put them in statements by including it in our bank. What's another word for bank statements? Bank recon. Yes. Okay, so let's go to our bank recon in our answer book. Okay, so we've created a line item over here for outstanding deposits. So we can go to outstanding deposits and we see a deposit on the 27th of June was 31,500. Let's include it. Again, deposits will increase on our credit side because deposits is an income. And incomes increase on your credit side. Yes. So 31,500. Can even make it easier for your examiner and write 27 June. Okay, then we've got outstanding payments because we see there is no other outstanding deposits. We move along. Outstanding payment. And then you can write your EFT of 944. And you've got an amount. Payments decrease our balance. So on our debit side, we've got an amount of 9,700. We've got another outstanding payment. This is a T, guys. EFT, not EFF. EFT 945. Very specific for our markers, so they do not struggle to figure out where you got these amounts from. Okay. EFT 13,300. Happiness. So we've finished everything here. So now it's in our CRJs, as they told us, and it's in our bank recon. So we are happy. Part E. The owner withdrew 11,000 from an ATM to pay wages on the dates, 29th of June. So is this current month or prior month? Current month. We know our totals for our our CPJ and our CRJ starts with your current months. Therefore, adjustments can be made to your CPJ or CRJ because those amounts were already included in your totals. Okay? And your bank recon is for your current month. So things that happen in the current month can also affect your bank recon. The owner withdrew 11,000 from an ATM to pay wages on the 29th of June, but did not inform the bookkeeper. Break things down. First thing you see, did not inform bookkeeper, so you know. So did not inform bookkeeper, not in journals. But now you think of which journals. Owner withdrew, took out money. Okay, so this is an expense. Drawings. Okay, and they took out 11,000. Okay, so we can go to our CPJ because an expense is seen in your CPJ of 11,000. Then we've got part 2. The owner, let's read it again. The owner withdrew 11,000 from an ATM to pay wages on the 29th date. Why did I highlight this date? Let's go back to the very beginning. We said that the information relates to us, Mango Traders, for June, our current month. Yes, the business uses the official bank statements, which is received on the 26th of each month, meaning from the 27th to the 30th of June. It is not in your bank statements, and therefore you adjust your bank recon. So going back down, 29th of June 2023 is in between, is after. 29th of June is after 27th of June, the cut-off for your bank statements. Therefore, it's not in your bank statements, and we need to include it in your bank statement. Okay, so amounts, let's include it in your bank statement. So we can say not included or omitted from bank statement. Omitted from bank statement. Wages. Make it nice and easy for our marker to understand. So wages, again, we said was an expense. And an expense is seen on your which side? Debit side of your bank recon statement. So on your debit side, then we've got how much? 11,000. Do you think there's anything else we missed? Are we happy? Two parts to part E. Then we've got part F. The bank statement balance is at the 30th of June 2023. Because nothing was given, we can assume that there is a balancing figure for your bank statement because we don't know what the figure is, but we can work out amounts for your bank account. So this amount there, we can make a small note to ourselves that it is a balancing figure. Okay, let's calculate everything then to get our balancing figure. Okay, so let's add up. So we've got 81,300 plus 22,700 plus 14,600 plus 240 to get us an answer of 98,840. Let's go to our cash payments. Again, you will receive pod marks for working, so just make sure you carry forward your totals. So 80,620 plus 30,000 plus 6,200 plus 6,200 plus 320 plus 3,780 plus 540 plus 11,000. And this gives you a total of 138,660. Let's transfer our totals as is. So even if you think it's wrong, transfer your totals because you will get carry forward marks, working out marks. So CRJ is always positive, CPJ is always negative. So positive, so plus 98,840. Negative amounts there, we've got 138,660 to get an answer of 9,280. Is this positive or negative? Which is very important for our following question. Positive, favorable. Okay, so we've got a favorable balance over here. Okay, and again, let's show to ourselves so we know which side does favorable balances go. A bank is an asset. Assets increase on their debit side, plus credit side, they decrease. So we've got this favorable balance here of 9,280, which will be shown on your which side? Debit side. Okay, so let's take that 9,280 and let's put that here, 9,280. And we don't know what this balancing figure is, so we're going to have to calculate our total for here. So let's add this up. We've got 9,700 plus 13,300 plus 11,000 plus 9,280 to get a total of 43,280. Okay, and we can see, so let's just calculate this side. Let's not assume. Okay, so let's calculate the other side. 31,500 plus 540 to get us a total of 32,040. And we can see the side is bigger, so we'll take our bigger amounts. So our balancing figure is 43,280. Okay. And then let's subtract our difference. So we've got 43,280 minus our previous answer to get 11,240. So this is equal to 43,280 minus 32,40. Happiness. Again, if there's anything that is not clear, leave it down in the comment section. Let's talk about it. Let's find answers for you. Let's help you understand things better. Let's get you closer to those distinctions. Okay. Or you could use this method over here. I prefer this 2-column method because it just makes more sense. Okay, so don't forget to write favorable balance here, because things increase on the credit side. Credit side will then be a favorable balance. 1.1.3. Explain 2 strategies that the business can use to address the problem in missing cash. Okay, so let's say this person is depositing 43,280 at the end of the month. That is a lot of money. So what can we do to eliminate our problem in missing cash? Okay, first thing we can do is, as cash is deposited, we get notifications from our bank that cash is deposited from bank. Instead of people depositing it where we can get mugged or robbed, as we saw in our transaction, our cashier deposited money and it got stolen from them. As opposed to our employees depositing cash, we can hire a company, right? It can deposit cash for us. So hire company to deposit cash on our behalf. What else can we do? So again, these are things you need to remember, okay? Another thing that you can do is deposit frequently. Deposit frequently. So you're not depositing large sums. Frequency. Ooh, frequently. So you're not depositing large sums at the same time. Anything else you're thinking? As long as you justify it, it will be correct. So just ensure that as you write your answer, you justify it and you score your full 4 marks. This is guaranteed 4 marks. You count this out already. Guaranteed 4 marks. You can even leave this for the end or start with it before you